What's up guys, Anthony here. In this video we are talking about the Atlanta market update 2023. Where has it been? Where are we at? Where are we going? What's going on with interest rates? What about home prices? We're covering all of that in this video. Let's begin. Hey guys, welcome back to the channel. My name is Anthony Laborde. I'm a licensed real estate agent here in Atlanta, Georgia. If it's your first time on my channel, thanks for stopping by. Go ahead and hit the subscribe button, hit the like button. It does wonders for these videos. Encourages me to put more content like this out to people like you wanting to learn about Atlanta. But as I mentioned in this video, we're talking about the Atlanta market. It is the new year, it's 2023. So much has happened over the last couple of years. It has been crazy, it's been volatile. We're seeing a lot more going on now with interest rates and home prices and inventory and days on market and all this stuff. We're breaking all that down in this video. I'm doing this a little bit different because there's some super important points that I want you to consider when you're watching these market updates. It's about looking at data over time. It's about looking at local specific areas of a city, not just the metro area. It's talking about median versus average. We're gonna get into all of this. It's gonna make a lot of sense. Let's jump right into it. So the first category that I wanna cover, and arguably the most important, are the mortgage interest rates. Now, before we look at the current mortgage interest rates, because that doesn't really tell us a whole lot, we need to look at historical interest rates. We've been tracking these rates since 1971. This chart here shows the weekly rates since 1971 all the way to date. Now, the reason I want you to look at this, and those that are as old as I am and lived in the 70s and 80s, you remember when it was 18%, 17%, you know, those years in the late 70s, early 80s, it was astronomically high. Maybe your parents talk about when they bought a house and how high that was. The average since 1971 is 7.76%. Guys, we haven't seen 7% since the early 2000s. Actually, 2001 was the last time we saw a 7%. So when you take that in consideration of where we were in the 70s, all that we've come through, the fact that we haven't seen a 7% since 2001, this should give you a good perspective of where we've been just the last, 20 years. So we've been spoiled in a way. We're getting closer to the average right now, so that's called normalizing. So let's take a look at the current rates as of today. So today, the national average is 6.59%. Now, depending on your credit score, you can get that a little bit lower, but we're at 6.5. And this shows us right back to September where we were just shy of 6%. So 6%, 6.5, that's where we've been in the last few months. Now let's look at some projections of where we're going into 2023. Now, when I did this, I looked at 4 different resources. We looked at the Mortgage Bankers Association, we looked at Freddie Mac, Fannie Mae, and also the National Association of Realtors. Now take a look at their projections here. Now the interesting trend that we're gonna see in all 4 of these is that they're starting off kind of in the same area beginning of 23. The first quarter is higher, it's actually where we're at right now in the mid 6s, and then starts to trickle down through the rest of the year. So check this out. The Mortgage Bankers Association, again, starting off in the first quarter, has us at 6.2%. That's where we are right now, dropping down to 5.6, 5.4, 5.2. That's a great trend. When we checked out Fannie Mae. Fannie Mae has us starting off at 6.5. Again, right where we're at right now, down to 6.4, 6.2, and 6.0. Another great trend. Freddie Mac, 6.6, 6.5, 6.4, and 6.2. Looking good. And then finally, the National Association of Realtors, they're much more optimistic about this than the other ones, but they're saying we're starting off at 6.1 and going all the way down to 5.5% at the end of the fourth quarter of 23. So we'll pause right there and let's just talk about the interest rates. Right now, people are freaking out about the interest rates. We've seen some volatility, we've seen it up and down. It got close to 7, but then came back down. Part of the reason why people are panicking right now is because we were so spoiled for the last couple of years and we saw 2%, 3%, 4%. First of all, clear that out of your mind. We're not going back there again. That is long gone. That was a unique situation. It was an outlier in terms of this data. We're now getting back to normal rates. So if you've been sitting on the fence about buying a house and you're worried about the interest rates, this should give you a really good idea of where we're going. And this is not Anthony saying it. These are 4 very reputable national sources saying we're gonna stay where we're at right now in the first quarter, mid 6s, and potentially go down into the mid 5s, maybe low 5s by the end of the year. Now, inflation has a lot to do with this, recession, what the feds do with the rates, but these are projections that the feds also are in line with. So interesting data here. Makes me feel good about the interest rates moving forward. Let's check out the median home prices. So again, before diving into this data, I want to make 3 different points about home prices that I think are super important. When you're talking about prices specifically, you need to use the median number versus the average number. Let me explain to you why. So take a look at this chart here. So let's say you have a neighborhood, there's 11 homes in there. 8 of these homes are around $100,000. But then you have 3 outliers in there. And I see this a lot in Atlanta because there's gentrification going on. So investors go into these neighborhoods that have historically low income, maybe low home values in there, but they'll come in there and take one of these lots and they'll put this big, massive home and then sell it for a great deal. Not in the best location in town, but it's a beautiful house and it's worth $1 million. So we see that a lot here in Atlanta, especially inside the perimeter. So this example here has 11 homes. 8 of them are in the 100,000, but 3 of them, one of them 650, one of them's $1 million, then one of them $3 million. So if you took a step back and said, what do you think about this neighborhood? What's the overall value? You know, you'd probably say a couple 100,000. Yeah, you have a couple houses over there. Well, the average price does not consider that. The average takes the sum of all of those homes, adds it up, divides by the quantity, divides by 11. That would give you a average home price of $498,000. Not a true representation of that neighborhood. However, the median home price lays all of those numbers out in order and takes the one in the middle. If you have 5 on this side and you have 5 on that side, the one in the middle is the representative of that total sample group. So in this particular case, if you did that, you would have a median home price of $105,000, which is exactly what you should have when looking at this neighborhood. So be careful when you're looking at other market updates and you other realtors making these videos. Use the median home price and not the average. Get your shit together. So the second thing I want to point out, and when you're looking at these data sets, and again, it makes me cringe when I watch other market updates, they're just showing you data points. You can't do that. What you need to do is you need to look at data over a time period. You know, when I was a statistician, my undergrad was in engineering, and we studied statistics. You did not have a trend until you had 8 data points in a row. Unfortunately, we're getting so many people out there, realtors, economists, people that are giving market updates, where they're literally just giving you 2 data points, last year's and this year. Oh, look, this is year over year. That didn't tell me squat. Show me 8 data points. Show me 10 data points. Show me pre-pandemic data points, then pandemic data points, then we'll talk like you know what you're talking about. The last thing that I want to talk about, when you're looking at market updates, let's say you're moving to Atlanta. You're not moving to Greater Atlanta Metro, are you? No, you're moving to Johns Creek, you're moving to Alpharetta, you move Marietta, Stone Mountain, all these little neighborhoods. Each one of these neighborhoods and these local areas are very different than the overall metro area. What goes on in Alpharetta is very different than what goes on in Jonesboro, McDonough, Stone Mountain, wherever. It gets so different. So when somebody's giving you an Atlanta metro market update, you know, be specific on what you're looking for, or team up with a realtor that can get into the granular data, way down into the weeds of this data to show you specifically what's going on in your area, not the entire state. So let's dive into it. So taking a look at these median home prices, take a look at this chart here. This is a chart of the entire FMLS area, and this is over a year. So this takes us back to January of 2021. The median home price for the entire FMLS area is $355,000. So many times realtors are grabbing this chart here, they're putting it in a video, they're showing, actually they're not grabbing this chart, they're showing you data points. This is my whole point here. They're showing you data points, but sometimes they may just look at the FMLS. Well, the FMLS is not even the entire metro area, it's even bigger than that. So this data here is a little skewed, and I'm gonna show you. So I'm gonna move over here and I'm gonna change this to just the Atlanta metro area. So just focusing on the Atlanta metro area, and we hadn't even gotten into the local suburbs yet, it automatically went up to $385,000 as the median home price. So again, it tightened up the metro area. It eliminated out into the country and way out into the suburbs. So we have a little bit more specific, but again, I want to prove a point with the chart here is that when you first look at this, you go, oh, this from January 2022 till now, got this big up and this big down. That's kind of cyclical. If you look at any data set over the years, a lot of that median home price goes up in the summertime. So spring, summer, that's our high demand, then it starts to drop back down. So this little pattern here is kind of normal. You know, and people are freaking out like, oh my gosh, look at this dip from 435 down to 385. That's a decent dip, but it's kind of typical. So what I want to do is even take this out further. So this will give you a better idea. And again, January the 1st of 2021, that was right smack in the middle of the pandemic. So all of this on this back end here, that's all a result of 2020 and 2021 and demand skyrocketing and inflation and recession and all this stuff and interest rates, and that's what's driving this price up. But let's go back even further. Let's take it back to 3 years. Oh my goodness. So if we take it back to 3 years, down to 2019, now this is the year before the pandemic, 2019, 2020, pretty normal. That's pretty normal. But then the pandemic hit. So right here, April of 2020, all hell broke loose. And you can see what started happening. A lot of this is that people were realizing they could work remotely, and they were leaving California, they were leaving Washington, they were leaving New York and Chicago, and the number of out-of-state clients I had over the last couple of years is mind-boggling. But our demand to move down here, and I'm going to talk about here in a second, the demand to move here to the Southeast was just skyrocketing. So we had the demand increasing, so that was starting to drive prices up. But let's go back even further. Let's take it back 5 years. If you go back 5 years to 2017, now we get a much clearer picture of what's going on. So when you just look at this year here, seems normal. Look at the 5 years. It's not normal. It's crazy. Starting right here in January of 2020 or April of 2020, the shit hit the fan. All hell broke loose and it started driving all these prices up. Then the recession, then inflation, all this other stuff. So what we're seeing now is a result of what comes up must come down. Now, what nobody else talks about here, and especially in these Atlanta market updates, and I'm going to get into it here in a minute, is the demand on Atlanta. If you're talking about a market update and you're talking about price fluctuations and days on market and how long all this stuff, you have to take into consideration the demand on that market, because that is a big factor when you're calculating where a market's going. Because if nobody wants to go there, that's going to tank. That market's going to tank. Inventory is going to skyrocket and demand's going to tank, and that's going to really wreck your market. All of a sudden it becomes a big time buyer's market, and it's very different than what we're seeing now. What we're seeing here in Atlanta is finally a cooling of the market. So one of the indicators of this cooling market are the median home prices, the projected prices. So a number of agencies, including some of those that are doing mortgage projections, have the median home price in late third quarter, early fourth quarter of this year here in Atlanta Metro at $395,000. If you remember, it's $385,000 right now, and we're on a decline. So we peaked out in June, we started to come down. Again, very seasonal, cyclical data starts to level off. We're gonna maybe have another month or two of leveling. Spring market, summer market are gonna start to go up, and then we're gonna have higher prices at the end of the year. So again, let me reiterate, if you're waiting for prices to tank, or if you're waiting for mortgage rates to come back down, you may be waiting for a long time. So I brought my chart back to a 1 year chart here just to give it a little bit shorter data points and it's not as confusing. And what I want to do now is break this down into the local areas and give you an idea of how important it is to team up with a local realtor that knows your local specific market and that understands this data and can explain it to you again in your specific area. So let's take a look at this. This again is the greater Atlanta metro area. We are last month, median home price $385,000. The number one suburb in Atlanta is probably arguably the highest demand suburb in Atlanta is Alpharetta. So let's take a look at that. Alpharetta. Oh my goodness. Now you can already start to see the importance of breaking down into local areas. If I went shopping in Alpharetta thinking that my median home price was $385,000, which is what Atlanta says it is, you're not gonna get a home out there. You're not gonna get one worth anything at $385,000 when your median home price is $579,000. So again, quickly you can see how important it is to look in very specific local areas. Let's take it a step further. Johns Creek. Johns Creek is arguably the second most desirable area. It's right there by Alpharetta. Let's type that in. Again, this is just showing the entire FMLS. Let's go. Type Anthony. Johns Creek. Oh my goodness. Again, another example of why you need to break it. Now these two suburbs are literally right next to each other. You wouldn't even know you left one and went into the other one because of how close they are. And the median home price in Johns Creek is $667,000. That's over $100,000 more than literally just a couple of blocks away. And Alpharetta's nice. It's the most desirable area. Johns Creek's nice too. And so again, you can start to see that if you're going to be looking at data, look at it over a period of time. Look at very specific data. Look at the median home prices and get with a realtor who knows what they're talking about and can explain all this to you. Let's look at one more and then we're gonna shut it down. Let's look at Stone Mountain. Stone Mountain is on the other side of town. It's on the eastern side of town. Very different market. Stone Mountain median home price is $265,000, even below the Atlanta Metro median home price. So again, looking at this data here, I'm just reinforcing the importance of looking at data over time. This year over year in stuff, it doesn't tell you anything. You gotta look at median home price. You gotta look at 8 or more data points. Go back pre-pandemic. This will give you a good idea of where we're going. So again, these projections moving forward, they're not coming down. You can see the trend, they're just going up. Atlanta metro area is the fourth fastest growing city in the United States and growing faster. The demand for the rest of the country coming here is through the roof. Atlanta is one of the markets to watch here in 2023. So again, hopefully this helps you understand where we're at, where we're going, where we've been, and eases your mind, backs you off the ledge a little bit. Those buyers that are waiting for the market to crash to buy a house, you're not gonna get a house. You got to move forward now. Now is the time to move forward. Start doing your due diligence now. Do your research. Get with the right realtor. Understand your local markets. Understand the data. And don't just look at these broad market updates out there. It's not going to tell you anything. So that's a wrap. Hopefully you learned something here. If you have any questions about moving to Atlanta, if your family's moving here, friends, please pass along my information. I love doing this job. I love meeting people from all over the world, getting them moved here and teaching them stuff, teaching them about the market. And don't believe the panic porn out there. The panic porn from the media is just, it's horrible. It's a product that they sell. They have to sell it. If it bleeds, it reads. Is that how the saying goes? And that's what they do. The Atlanta market is nowhere near the rest of the country. We're not gonna crash. We're cooling off. It's a great time to buy a house. It's a great time to sell your house. It's now in a balanced market. So again, guys, Happy New Year. Hope you had a great, safe one. Hope you enjoyed this video. And until next time, have a great day.